This is an Uncovered Japan Company research report on HOYA, ticker 7741. HOYA began as an optical glass maker and now spans eyeglass lenses, medical devices, semiconductor photomask blanks, and hard disk glass. The central question is not whether these businesses are exceptional, it is whether the current valuation already reflects that quality. At the report reference date of 17 July 2026, HOYA traded at 33.9 times trailing earnings and roughly 38.5 times normalized earnings. Fiscal 2026 return on equity was 24.8%, and operating margin was 29.1%. Those are elite figures, but the modest 1.17% dividend yield and premium multiple mean the investment case depends on durable execution rather than a large valuation cushion. HOYA's products are easy to miss because they sit upstream. Semiconductor makers need its ultra-flat mask blanks to make photomasks. Data center storage uses its glass hard disk substrates. Life care includes eyeglass and contact lenses, while medical supplies endoscopes, intraocular lenses for cataract surgery, and artificial bone. Across these businesses, the common advantage is precision at a level where a cheaper substitute can be far more costly than the part itself. The segment chart is the key to understanding HOYA. Life care generated 62% of fiscal 2026 sales at a 21.9% operating margin through healthcare lenses and medical devices. Information and communications accounted for 37% of sales, but delivered a 54.2% margin and more than half of group profit. The company is therefore balanced between a larger healthcare base and a smaller, much more profitable technology franchise. Within information and communications, electronics is the strategic core. It represented 31.3% of fiscal 2026 revenue and includes photomask blanks and glass hard disk substrates. The report estimates HOYA has more than 60% of the global photomask blank market and more than 75% in EUV blanks. That leadership does not eliminate the semiconductor cycle, but it gives HOYA a powerful position in a component whose quality is fundamental to leading-edge chip production. HOYA's consolidated numbers show a strong operating record. Revenue rose from 661.5 billion yen in fiscal 2022 to 947.7 billion yen in fiscal 2026, a 9.4% five-year compound annual growth rate. Operating profit rose from 197.7 billion yen to 275.5 billion yen. The pattern reflects both the recovery in technology demand and the resilience of the life care base, although investors should separate underlying operating progress from one-off effects in reported net income. Fiscal 2026 net income reached 253.1 billion yen, but the report identifies roughly 34 billion yen of one-off gains. That matters because valuation based only on reported earnings can understate the effective multiple. The report's normalized price-to-earnings figure is about 38.5 times, versus 33.9 times trailing reported earnings. The business quality is clear. The question is how much of the exceptional result should be treated as recurring. The balance sheet is unusually strong. Fiscal 2026 operating cash flow was a record 278 billion yen, and free cash flow was 222 billion yen. HOYA held 532 billion yen of net cash, with a 78.4% equity ratio. That conservatism limits financial risk and gives management flexibility, but it also makes capital allocation important. A large idle cash balance can dilute return on equity, unless buybacks, dividends, or investment deploy it productively. HOYA's moat has several layers. In advanced semiconductor materials, the technical barrier is defect control and extreme flatness. In hard disks, scale and materials know-how matter. In medical products, regulatory clearance, clinical evidence, and surgeon relationships take years to build. Customers in all of these niches are buying trusted performance and reliable supply, not merely a low unit price. This is why a portfolio of seemingly unrelated products can share one economic logic. HOYA is exposed to two large secular themes. AI and advanced semiconductors raise the technical bar for mask blanks and support data storage demand. Global aging supports cataract lenses, endoscopes, and vision care. The balancing risk is that the most profitable electronics business remains cyclical. Information and communications revenue fell 6.6% in fiscal 2024. With around 80% of sales overseas, a stronger yen can also materially reduce translated profit. These are the report author's analytical scenarios, not price targets or recommendations. From the 25,215 yen reference price, the fiscal 2029 base case reaches 27,476 yen, roughly 9% higher, while the bear case reaches 16,148 yen, roughly 36% lower. The base case assumes solid segment growth, margin improvement, and continued buybacks, but a historical average multiple rather than a peak one. The asymmetry highlights why entry valuation matters even for an exceptional business. HOYA combines a rare set of precision materials and medical moats with high margins, strong cash generation, and a deeply conservative balance sheet. The favorable long-term themes are real, but so are the semiconductor cycle, currency sensitivity, and a valuation that leaves limited room for disappointment. Investors should watch demand in information and communications, life care margin resilience, the pace of buybacks, and the yen. Please explore the full free deep dive at Uncovered Japan. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.